Here we go again. UBS making the same mistakes as Credit Suisse. Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, welcome back Branko, who's really painting a similar story to the story he was painting earlier in the year, just with different names on the header this time. How are you going today, Branko?
Good. Very excited for today's topic. It's a bit of a complex one, but I think it's very interesting.
It is complex. You were explaining it a little bit to me before, but I'd like to sort of dumb it down a little bit more so I can fully get my head around it. Can you start off really by telling us what's happened since the UBS Credit Suisse takeover? Because we saw that situation happen, and now we've got sort of other things blowing up off the side of that. Can you just give us that big picture overview of what's happened and where we find ourselves today?
So, as we all know, about 6 months ago or so, UBS took over Credit Suisse, and it was kind of a bank bailout that wasn't a bailout. But a couple of key things to bring into the conversation are that this is like the first time where AT1 bondholders, which is a certain type of bond that was brought in after the GFC to prevent bailout situations and taxpayers footing the bill. This is the first time that those bondholders were deprioritized over equity holders.
So just to pause there, this idea of a bond when you're a bondholder in the debt structure. So if the company fails, the idea generally is that bondholders should be the ones who are made whole first, isn't it? That's the concept.
Yeah, but these specific bondholders weren't, and equity holders were actually made whole before then. So they lost quite a lot. And the reason that it's important is it's because it reverses like what the traditional hierarchy is, and really it goes against like the terms and conditions of what people signed up that own those bonds.
Yes. Yep.
You know what I mean? That's the first point. And the second point since then that we saw recently, that they announced a $29 billion quarterly earning last quarter, which is extraordinary, but it's mainly because of like accounting gains from Credit Suisse. So they've taken on Credit Suisse onto their books. That's what's happened since then. And the key point is that a big structural issue with Credit Suisse was the use of these bonds, and then making sure that equity holders got whole. And then because equity holders got whole first, we now see these big kind of valuations with UBS. Obviously, that helps UBS, right?
Yeah.
From an optics perspective, amongst many other things as well.
So if they're doing that, does this have the potential? Well, you're clearly highlighting the potential that that's dangerous for investors. Does that sort of spread more broadly? How do you see that?
So the big thing today is UBS has basically said in like a roadshow that they want to introduce these AT1 bonds as well now. And it's like, okay, well, so the promise of these bonds is that, again, you're going to be prioritized over equity holders. But if you're offering the same thing that Credit Suisse offered, right?
Yep.
You just bought it, like the same people are probably involved in UBS, you know what I mean? So who's to say they're not going to do it again in the event of a collapse, and then these same bondholders are going to be, again, out for their money. So that's kind of the big takeaway, is they're just copying the mistakes of Credit Suisse potentially. Especially another key point is in a time when they probably need capital, right? Like you don't just take on a dying company and then you make $29 billion and then everything's fine. Obviously, the company still has issues, and they probably have capital requirements they still have to fill in. Those don't go away, especially because UBS is now greater than the size of Switzerland's GDP. So hard to think that the government can help them out very much, right?
So that's mind-boggling in itself, isn't it? Just to realize the scale of this.
Yeah, it's pretty crazy. And just to think that, UBS needs funds. They're trying to issue them through these bonds, and they have this kind of profit figure set up as, look how well we're doing. It just screams to me like there is a bit of danger there. I mean, who's to say, again, it's likely that the similar people are involved in UBS and Credit Suisse if they bought them out. Like these board members and stuff don't necessarily just go away. So it's kind of a warning that, maybe these bonds, they could kind of go back on their word again.
And that's what was just going through my head while you were talking about it. Like, that old saying, once bitten, twice shy, you almost it's almost on you at this point if you go back in to the exact same scheme that was running last time that sort of screwed them over.
And then it's kind of self-fulfilling prophecy as well, because as we can get into, a lot of like investors and bondholders were talking about how they just don't want to touch it because it's like, fool me once, shame on me, but forgot the saying.
Exactly. I get what you're saying.
So obviously they're a bit skeptical of it, and rightfully so. And as we'll get into, UBS is trying to change it to make it more palatable for investors. But I think people.
Well, yeah, that's sort of my next question. So how, is there a way they can change this to make it more investor friendly? How do you go about? Well, it feels like, how do you go about restoring this sort of seniority that you expected from bonds traditionally?
The one bondholder was basically said that, I was quoting real quick, but equity conversion is probably better, and there is more of a demand to do that.
Right.
Which is kind of a funny thing to do, because it's like, oh, you can turn it into equity, so then in the event we go back on our word, you can get your money back, which, if you think about it, doesn't really make sense, because you're like, why don't you just stick to your word? You know what I mean?
Yeah.
And then
and equities have a whole lot of other issues attached to them as well, because, for example, you can dilute equity. The company can issue more shares at will, buy back shares, which obviously would be in your favor. But the reason bonds were there is to not have that sort of risk, that they can just be diluted away as well.
And this bondholder was effectively saying as well, like, even so, we're not naive enough to take these risks with them anymore. So that's one way they're trying to kind of change the optics of it. But again, it is concerning, and I'm not saying UBS is going to go under or anything, but it's like, if they're trying to implement the same thing that Credit Suisse implemented when they were in their time of strife, and then go back on their word, it is a worry.
Well, to wrap this up, let's just explore that a little bit. So, would there actually be any ramifications for UBS in the event of another collapse? If this is the path they're going down, and effectively pushing the responsibility off to the debt holders or the shareholders, or whoever's, in quotes, silly enough to purchase there, is there any ramifications? Are they held to account?
Yeah, I think it's something I'm struggling to understand, but because, again, like we said earlier, Switzerland can only do so much. So a government bailout isn't probably very likely. But as we saw with the Credit Suisse situation, the US did send money to help Credit Suisse via a swap line. So I think it's possible that, again, because they're too big to fail, like UBS, they're Credit Suisse and UBS before, so it's massive amount of assets under management, right? Because they're too big to fail, you probably see the US taxpayers end up, again, having to pay for this one, because Switzerland probably are going to struggle too. And in the event it would have happened, that, again, they have too many assets. So it's hard to see them truly failing.
And this concept of too big to fail is absolutely what's at play here, because when you get to that scale and the ramifications of failure, which was sort of the question, I suppose, but there are too many. It simply won't be allowed to happen. And if it's too big for the country involved, so in this case, you sort of Swiss scenario, if it's too big for them to bail it out, it really does fall on other countries, other institutions from the West to bail them out. And that's inevitably what we would see happening, I imagine.
Yeah. And one thing I have to add as well is, we compare this to some of the stories we've had on small to medium, regional banks. And, it's almost, they're a lot more likely to truly fail, because they're not as important structurally to the economy. So in a way, even a scary news story about UBS would obviously cause massive contagion, but actual banks going under is more likely to occur with these much smaller ones. So I think that, as far as failing and collapsing, UBS is a very low, it's not a low level, because it probably needs to get bought out or something like that.
Yep.
But structurally, it just proves that the banking system has a lot of, as we know, as gold bugs, a lot of faults to it.
Yeah, it certainly does. And we haven't seen yet the underlying causes of those regional bank failures that you were talking about disappear. They're still there. It's been quiet for a little while, but the risk factors are still there. So it's really not the end of that story yet, I don't think.
I agree, absolutely.
Yeah. Well, Branko, thank you for that today, as always. Fascinating insight into what's going on and sort of keeps us up to date, particularly those of us who aren't really on top of all these stories that are emerging, because ones like that are really quite important, but not always front and center in our minds. So thank you for that.
Thanks, Chris.
Thanks everyone for watching. Remember, reach out with any questions or comments on social platforms. Wherever we can, we'll get back to you and help out with those if we can. That's us for today. We'll be back tomorrow with Sam to discuss all things markets and metals. Until then, have a great rest of the day, everyone.